for ads because they were afraid I was making more money than the professional who was running it. So it was an interesting life experience.
What if I told you the world's smartest investors aren't human anymore? Across global markets, artificial intelligence bots are managing millions, and sometimes billions, of dollars with almost no human supervision. These autonomous investors never sleep, never panic, and never guess. They process market data faster than any analyst, react in milliseconds, and learn from every trade they make. It's not a fantasy of the future. It's happening right now. From hedge funds to crypto exchanges, artificial intelligence bots are taking control of investment portfolios and outperforming human professionals at an unprecedented scale. In this video, we'll uncover how these digital investors work, why they're dominating finance, and what it means for your financial future. The birth of the autonomous investor. The first artificial intelligence traders started as tools, algorithms built to assist humans. But over time, they evolved into independent decision makers. Using machine learning, they no longer rely on pre-programmed instructions. They study data, identify patterns, and execute trades based on real-time probabilities. Each market move feeds them experience, improving their logic with every iteration. These systems can manage complex portfolios across multiple markets simultaneously, from stocks to crypto to commodities. What began as simple automation has turned into self-governing intelligence. The modern investor isn't a person on a trading floor. It's a network of artificial intelligence systems working 24/7 without emotion, fatigue, or ego. How artificial intelligence reads the market. Traditional investors use charts and reports. Artificial intelligence reads the entire digital universe. It scans price action, news feeds, social sentiment, and even satellite imagery. It notices details no human ever could, like shipping traffic patterns or weather data that hint at supply chain disruptions. These signals are converted into predictions within seconds. When markets react, artificial intelligence bots are already ahead, adjusting portfolios automatically. They don't just follow the data, they anticipate it. That's what gives autonomous investors their edge. They're not emotional gamblers reacting to headlines. They're silent analysts who understand cause and effect before anyone else even notices the trend. The death of the human trading floor. There was a time when trading meant noise. Phones ringing, brokers shouting, chaos everywhere. Those days are gone. Most major trades today are executed by artificial intelligence systems running silently in data centers. Wall Street's iconic trading floors have become algorithmic ecosystems. Instead of human instincts, they rely on code that learns, predicts, and outperforms. Some hedge funds now operate with almost no traders at all, just data scientists training models. This transition isn't about replacing humans, it's about outpacing them. The market no longer rewards emotion or intuition. It rewards intelligence, precision, and speed. And artificial intelligence delivers all three perfectly. Machines that manage billions artificial intelligence portfolios now control massive amounts of wealth. BlackRock's Aladdin system, for instance, monitors over 20 trillion in global assets using advanced analytics. Hedge funds like Renaissance Technologies and Two Sigma deploy fully automated systems that execute millions of trades daily. Even smaller firms use artificial intelligence bots to manage funds and rebalance portfolios automatically. These digital investors operate continuously, adjusting exposure, hedging risk, and compounding profits with surgical precision. The result? Performance that consistently beats human managers. The more capital these systems handle, the smarter they become, creating a feedback loop where data turns directly into dominance. Emotionless investing, the machine advantage, fear, and greed drive most market mistakes. Artificial intelligence has neither. It doesn't celebrate profits or mourn losses. It processes them as information. When prices crash, it sees opportunity. When bubbles form, it sees warning signals. That emotionless precision allows autonomous investors to stay calm while humans panic. In the 2020 market crash, machine-driven funds stabilized faster than traditional ones because they reacted logically, not emotionally. They're not smarter in the human sense. They're simply consistent. And in the long term, consistency always beats chaos. It's the same principle behind compounding. A small advantage, repeated perfectly, creates massive results. Learning from every mistake. For human traders, experience is limited. For artificial intelligence, it's infinite. Every transaction, every trade, every anomaly becomes a lesson. Machine learning systems adjust their models instantly, improving accuracy with each iteration. This means autonomous investors never truly fail. They evolve. If a strategy loses money, the system doesn't need to reflect or recover emotionally, it just updates the algorithm. Over time, this turns artificial intelligence into a compounding intelligence engine, constantly refining its own playbook. Human traders plateau after years of learning. Artificial intelligence gets smarter every second. That's why the gap between man and machine in finance keeps widening exponentially. The rise of artificial intelligence hedge funds, a new generation of hedge funds, now runs entirely on artificial intelligence. They have no human traders, only algorithms that identify inefficiencies across global markets. These systems analyze thousands of variables simultaneously, everything from GDP shifts to Twitter sentiment. When they detect an opportunity, execution happens instantly. The results speak for themselves: double-digit annual returns, lower risk, and zero downtime. These funds don't rely on luck, they rely on learning. As data grows, so does their advantage. In a few years, many traditional hedge funds may either merge with or vanish under the dominance of these self-learning, autonomous investment machines. The artificial intelligence, crypto connection, crypto markets are the perfect playground for artificial intelligence. They're 24/7, volatile, and data-rich, exactly what autonomous investors need to thrive. Artificial intelligence bots track blockchain transactions, social sentiment, and whale wallet movements in real time. They identify arbitrage opportunities, predict token trends, and execute trades instantly across multiple exchanges. Some even use reinforcement learning, improving through trial and error inside live markets. In crypto, where timing and speed are everything, human traders simply can't compete. The fusion of artificial intelligence and blockchain is creating a new kind of investor, one that's decentralized, adaptive, and nearly impossible to beat. From advisors to autonomy, not long ago, we had financial advisors managing portfolios with spreadsheets and phone calls. Now, artificial intelligence handles everything, from stock selection to tax optimization. These systems personalize investment strategies around your income, risk tolerance, and goals, then adjust them automatically as markets evolve. For retail investors, this means Wall Street.
Yeah, so I've been thinking about AI for a long time, since I was in college, really. It was one of the things that just sort of
Level precision without Wall Street fees. Your portfolio can now think for itself, rebalancing, reinvesting, and compounding while you sleep. The result is a quiet revolution in personal finance wealth that doesn't need management, only monitoring. And soon, even that might be handled by artificial intelligence too. The human role in an automated market, with artificial intelligence running portfolios, what's left for humans? The answer is vision. Machines are brilliant at optimization, but humans still provide creativity, ethics, and direction. We decide the goals, the bots execute them. The most successful investors of the future won't compete against artificial intelligence. They'll collaborate with it. Think of it as co-investing with your own digital twin, one that knows every market nuance and acts with perfect discipline. The investors who learn to manage this partnership will build fortunes. Those who resist it will be left behind. In this new era, intelligence isn't replacing humanity. It's amplifying it. The ethical question: who owns the decision? As autonomous investors grow more powerful, the ethical questions become impossible to ignore. Who's responsible if an artificial intelligence bot triggers a market crash? Who owns the profits it generates? The coder, the investor, or the algorithm itself? Financial regulation hasn't caught up with self-learning systems that make independent decisions. The coming years will test not just markets, but morality. As artificial intelligence begins to manage global wealth, society must decide how much control we're willing to surrender to machines, and whether we're ready for a future where algorithms don't just trade money, but control it. The future of wealth management: within a decade, most financial assets will be managed by artificial intelligence, from your retirement plan to trillion-dollar sovereign funds. These autonomous investors will coordinate global capital flows faster than humans can even comprehend. The question isn't whether this will happen, it's how we'll adapt when it does. Wealth management will shift from making decisions to designing systems. The next generation of millionaires won't be traders. They'll be builders of artificial intelligence investors that trade for them. The financial elite of tomorrow won't have better instincts. They'll have better algorithms. And that, more than anything, will redefine what it means to be rich. Artificial intelligence investors aren't coming. They're already here. They're learning faster, trading smarter, and managing money with machine-level precision. The financial world is being rewritten by systems that never rest, never doubt, and never stop improving. Whether that's exciting or terrifying depends on how ready you are to adapt. The future of investing isn't about picking stocks. It's about understanding intelligence. Because soon, the smartest investor in the world won't have a name or a face. It'll be a machine, and it might already be managing your money. If this opened your eyes, make sure to like, share, and subscribe. The next era of wealth has already begun.